I believe one of the biggest financial risks facing the world over the next decade is not simply a stock market crash. It is the retirement crisis quietly building underneath the global economy. Millions of people are approaching retirement with portfolios heavily exposed to financial markets. At a time of rising debt, inflation pressures, geopolitical instability, and enormous structural change driven by artificial intelligence and automation. For decades, many people believed the formula was straightforward: work hard, save consistently, retire safely. But the reality is that the financial system has changed dramatically. In previous generations, retirement security was often supported by defined benefit pensions that provided stable lifetime income. Today, much of that responsibility has shifted onto individuals through self-managed retirement accounts, investment portfolios, and personal savings. That means ordinary people now carry far greater market risk than previous generations ever did. And many do not fully realize it. At the same time, we are living through one of the largest asset expansions in modern history. Property prices surged, stock markets surged, government debt surged, liquidity surged. In many parts of the world, entire economies became dependent on continuously rising asset prices. But asset prices do not rise forever. And when markets eventually correct, the consequences are not just financial. They become social consequences that affect us all. Because people close to retirement do not always have decades to recover from major drawdowns. This is why I believe financial education has become one of the most important survival skills of the modern economy. Not fear, not panic. Education. People need to understand risk, cash flow, inflation, debt, diversification, asset allocation, and how different economic cycles affect wealth preservation. In my view, relying entirely on salaries, governments, or a single pension system is increasingly dangerous in a world changing this quickly. The future belongs to people who build resilience. That may include diversified investments, real assets, businesses, cash flowing opportunities, technology exposure, or alternative stores of value. But above all, it requires adaptability, because the world is changing faster than most retirement systems were designed for. Artificial intelligence alone could reshape industries, employment patterns, productivity, and wealth distribution on a scale we have never experienced before. Some people will see extraordinary opportunities. Others may struggle if they are financially unprepared. This is why I believe the conversation about money must evolve beyond simply saving for retirement. The real question is, how do we build financial systems and personal strategies that remain resilient during uncertainty? That is the challenge of the next decade. And those who invest in financial intelligence today may be far better positioned for whatever comes next. Subscribe to Adriana Armstrong for more insights on investing, AI, financial psychology, and the future of wealth. Join the future of AI-powered investing and financial intelligence at chatami.ai and aim-cube.com.